Who would like to ask the panel here a question? Sir.
Thank you. David Fisher of the Capital Group in Los Angeles. If you two could snap your fingers and unilaterally change one thing in the world, what would it be?
So who am I going to be very unfair to and ask them to answer the question first? Christine.
I think it's an unfair question, because if I could do anything I wanted, I would just eliminate and restructure total public debt around the planet. But obviously that's not in the cards, because you have to... Take a second choice. Okay, second choice. All right. Assuming that one has failed. I would say for the Eurozone to deliver on its commitment to actually create more Europe than what it is at the moment. We heard this morning, I think it was Mario, who actually indicated the deficit, the debt to GDP, in a way the unemployment and inflation within the Eurozone. Quite remarkable when you compare it to Japan, to the United States. But it stops there. And this coagulation of member states does not translate into one single economic, fiscal, banking union. So I would agree with Mario that what happened, and I'm trying to have a realistic, snap of the fingers. What happened on the 28th and 29th of June was more than welcome, but it's step number one. It's a building block that needs to be delivered upon and needs to be followed by many other building blocks so that the road to not Damascus, but a real confederation, federation, however it's called, of European member states actually delivers a cohesive economic, fiscal, monetary, and financial and banking union. That would be my sort of short-term snap of the fingers.
Right, Ango, you've had a few minutes to think about this.
Yeah, you have to be much more creative.
I'd go, I think I'd eliminate inequality, closely associated to poverty, closely associated to the labor markets, because it would mean that the labor market is delivering, and at the same time it would mean that we have a modicum of economic recovery. So I'd start from the bottom up in order to get the chain moving, and then get the more general and perhaps more desirable outcomes. I'd also mention that the reason why we're focusing on this question of inequality is because it used to be a byproduct of good or bad policies. And then we used to deal with it by saying, okay, the good or the bad policies, recovery policies, labor policies will take care of it. And I think now it's gotten to a point, and that includes in the OECD countries and of course in the emerging and developing countries, it's gotten to a point where you need to deal with the problem of inequality as a targeted policy per se. You can't deal with it simply as a residual of the other policies, and you can't assume that it's going to go away because you get the other policies right. Now today, I see the medical advisor here, and I see the social services infrastructure that was discussed here and other. That, of course, goes to a very great extent in that direction, when the deliverables at the social level, which still leave a lot to be done, could be better satisfied.
Right, who's got another question? Pete.
If one accepts the premise, which is that neither more consumer credit nor more government spending are going to be major sources of growth over the next few years, one has to then assume that private investment is going to be the main driver of growth. I guess my question and / observation is, there's an inherent tension, it seems to me, between the political debate, especially in the light of, the obviously very difficult the source of the crisis, and the economic desire to incentivize people to make profit. I guess my question is, how should politicians and global leaders deal with that tension between the understandable desire to get re-elected and the ability to create an environment in which making profit and therefore making investments is encouraged?
I mean, I'll say something and then ask my colleagues to say something. But I think ultimately you're judged on whether you're pursuing the right economic policies in politics. And as a government, we have taken decisions which are not obviously popular in a democratic country. We've cut business taxes, and obviously businesses don't have votes, people do. We've taken the controversial decision to cut the 50p rate of tax. And we've done these things because we think they're making the country uncompetitive. And if you make the country more competitive, you will get more inward investment, your exports will be more competitive, and that will create jobs and prosperity. So I think ultimately, governments that chase the focus group come unstuck. Governments that stick with good, sound economic policy and stick to it even when the political pressure mounts, get the rewards.
This conflict that you alluded to was best illustrated by a comment made by Jean-Claude Juncker, who is the president of the Eurogroup and the Prime Minister of Luxembourg. He said, we really know how to fix the crisis. The only thing is that we don't know then how to get re-elected. And that's what you're alluding to. He was a bit cynical, actually. But, I'm trying to look at it from my own vantage point where I am now. And I think that's where international institutions must help. Because governments are bound to seek re-elections. Members of parliament are bound to seek re-election. And sometimes there is this collision course between seeking re-election and having the courage that Chancellor has just referred to, which is to take the right measures given the circumstances, which doesn't necessarily make you popular. And that's where international institutions have to be there to actually give the analysis as they see it, be as realistic and as honest as they can. We use the coined sentence, speak truth to power, which is a bit funny because it's as if, we were holding the truth. But at least say what we really and honestly think about the situation, knowing that we international institution representatives are not running for any kind of re-election, and there will be somebody else to take our job once we've finished our term. And I think we have to do that. And sometimes we have to run the risk of being vastly unpopular, being targeted and being criticized heavily because we're telling the reality of what we see and what we analyze in good faith. It's happened to my predecessors, it's happened to me, it will happen to my successors, but that's what we should do.
Let me take a different tack. I think you're underestimating the voters' intelligence. If you do not create the ability, you do not create the conducive environment, you won't get reelected. It's exactly the opposite of what you said. If you get politicians who are playing the crowds and trying to be everything to everybody and please, they won't go very far because people know that there are hard choices to take. Real leaders take the hard choices, they bite the bullet, and they lead, even if it is unpopular. It's not just us who take, the flak. We're happy to do that. It's part of our job, yes. But in the end, we serve the people, the membership, through the leadership, and in the end, the leaders have the options, and they are the ones who move in one direction or the other. And if they take the easy way out, they can do it once, they can do it twice, but then they're going to be called Exit Joe, and they're going to exit. We had 13 or 14 of those just, in our closer neighborhood around here. So, and people are just looking through and saying, are they doing the right thing? There is a premium on courage, there is a premium on enlightened leadership, there's a premium on showing the way. Especially now that there's so much confusion that everybody, you need the papers every day, you see a few programs with opinions, and you get very, very confused, sometimes completely disoriented. So you need people who say, well, this is the way. And sometimes it's not popular, but I think those are the ones that are going to prevail. We'll support, we'll go along, we'll try to protect the flanks, but they have to take the leadership.
You don't go as far as to say that all those who have gone didn't have the courage in the last couple of years.
No, I think clearly in a crisis, incumbents have a hard time. And not all the incumbents who are no longer with us deserved not to be with us any longer. Politics is tough, but the alternatives, I think they probably would have exited a lot faster. And those who did play to the crowds, I think, did so because maybe they were not clear enough.
Madame Lagarde, of course, was finance minister in the last French government.
If I could just draw a parallel with inflation targeting. You mentioned that this year growth is going to be 3.5 and maybe next year 3.9. Clearly previously, as you said, it was much higher. But also previously, it was very heavily fueled by an unsustainable credit expansion. So, what would be good enough growth? Where are you trying to get growth back to so that as institutions you stop acting to impel growth? And is that new sustainable growth rate going to be less than it was in the past?
Christine, do you want to take that
I
on?
think growth going forward is going to look a lot different than what it looked pre-crisis. Number one, because there is clearly rebalancing happening as we speak between some of the emerging market economies and the advanced economies. I mean, when you look at the current account of China, for instance, there is clearly rebalancing happening. There's a shift from this export-driven economy to a much more domestically driven economy, be it by investment or by consumption. Maybe more so of the latter than the former. But that is taking place as we speak. And although there will be some readjustment, still the general direction will have changed, and probably for the better, because it will have taken people out of poverty, out of inequality, hopefully, if those governments are lucid enough to understand that they have to fight vast inequalities as we see them developing in those markets. So that's number one. Number two, we would hope that, as is advocated by Mervyn King, for instance, the culture in finance, so to speak, or in banking world, will change to the point that GDP will be measured by way of creation of actual value, more so than, sometimes what has been referred to as hot air. Now, will that be accompanied by a new way of measuring and evaluating growth and creation of value? Is something that I believe the OECD is working on, we are working on as well, and that makes me think that growth in the future will look different. Better rebalanced, differently measured, but certainly with growth needed. Because if we want all to fight poverty, to reduce inequality and make sure that our societies are more cohesive, we will need a certain degree of better balanced growth.
No, and I would just add, I mean, obviously, in a way, this conference is a sign of what we're trying to do in the UK. I mean, we are trying to reorientate our economy towards exports, and particularly exports connected with some of the fastest growing parts of the world. And, that is something that we are making a very, very determined effort to do, precisely to change the composition of growth, understanding that a return to growth based on debt-fueled public spending and debt-fueled consumer spending is just not, it's probably not possible, and it's certainly not sustainable. Let's take another question from someone. Who's got one?
Or violent objections? Or
Come on, let's have one.
Yes.
Charles Beasley, back to the politics, I'm afraid. Former German Chancellor said somewhat recently that he felt that a definition of leadership, for want of a better word, was the willingness to speak the truth and lose an election. This morning we heard from the ECB governor, who suggested that the solution to the crisis would require a degree of elevation of sovereignty away from the national governments to supranationals. So here's my question. Do you think the politicians can deliver their electorates on that?
It reminds me of a discussion between Voltaire and Rousseau. And
That's a good way to start any conversation.
impeccable.
And Voltaire said to Rousseau, life is terrible. Rousseau responded, compared with what? So I'm not suggesting that we have to be so close to the abyss that there is just no alternative and no option. But it might be part of the equation of having to share sovereignty, as nicely put by Mario this morning, rather than surrender a portion of sovereignty, if the outcome of the sharing process is going to bring the economy back away from the abyss and with a more sustainable future and you know, less unemployment, lower yields, global reach still, and certainly better growth. I'm not sure that I've actually addressed your question. I think it takes more than courage to go forward and say, you know, I'm surrendering part of my sovereignty, and my defense decisions from now on, and my decisions on budgets, and my decisions on raising tax will be actually compounded by whatever is happening in 16 other member states. That's a tough call. And my banks will be from now on supervised by the European Central Bank. That's a tough call. So, as I said, compared with what?
Can I ask you a question, which is, why do you think France seems more relaxed with this than some other member states? There doesn't seem to be quite the debate in France that there is in other countries.
Can I decline?
Yes. Of course.
Let me suggest that, again, there's a certain degree of conventional wisdom in your question, because we're always quoting, you know, famous quotes by politicians speaking about politicians or whatever, like this first question here. I think that today, if you don't speak the truth, you can prolong your political life a few months maybe, but things catch up with you so fast. And I'm going to give you an example, not too far away from here, okay? The UK announced the toughest adjustment package. It was the equivalent, you know, without being too dramatic, to blood, sweat, and tears, you know, in economic terms. And they said it's not going to look good, it's not going to feel good, and we just have to go through with it. They also announced enough elements in the package that it would make it credible, and also suggested some of the possible consequences. But then they also painted the picture of where you would eventually get to, okay? Now, why have we gone through rough patches and, you know, lower than expected growth and things like that? Why do you continue to have the lowest borrowing costs? Because you went full Monty on day one, okay? You said how it was going to be. Now, what I don't understand very well is why every time we actually go through the rough patches we said we were going to go to, people start rending their clothes and dousing themselves in gasoline, getting their Zippo, you know. But that actually is happening to a part of the audience. But basically, everybody knows that we were going to go through this patches, the rough patches, and there was going to be low growth. In the end, there is, it's not the Holy Grail, it's not El Dorado, but as I say, it's out of the hole, okay? That's good enough these days. And into medium and long-term sustainable growth, because you go structural and you go green, you do what the OECD recommends you to do. And but effectively, what happens is there are examples today, okay? The ones who said, let's do, you know, collective bargaining, okay? So you spend all your political capital and you get collective bargaining, and you didn't do the pensions, and you didn't do the deficit, and you didn't do. So, of course, that's not necessary. The markets catch up with you. They start destroying you. And you say, okay, we'll now do deficits, okay? So you do deficits. It's cutting your tail in little bits and pieces. It's 10 times painful, you know? And it's just as painful when you cut it once, big tail, you know, than when you cut the little bits and pieces. And it's very, you know, bloody and everything else. And it doesn't work. This is the most, it doesn't clear. Here it cleared. It continues to clear because there's a minimum of consistency. The things that they said would happen are happening. And then within something that's not a very comfortable state, it's like wearing a suit that is a little, 2 or 3 sizes, a little bit smaller. But then you try to reallocate. You try to reallocate within the envelope. There are things that governments can do, that society can do, that financial systems can do, provided, you know, you agree and you. But I don't think that because you say what's going on, you can lose the next election necessarily. It also happens to have a little bearing on how you say it, what you say, and what, and maybe if you have somebody to blame, it helps too. But anyway,
Who's got another question? There's one at the back over there.
Hi there, Bernard Mensa. Can we get to sustainable growth with the banks essentially looking to shore up their capital levels and the capital markets being in some stress, i.e. when you think about growth, which is the fundamental issues we deal with? And this morning, Mr. Draghi said that he can't really address the issue of bank undercapitalization. Are there ways in which governments can work around that, or do we need to wait until really the banking system or the capital markets are able to transmit credit growth through their systems?
I mean, let me say something and then ask my colleagues. I mean, first of all, I think those countries which have addressed shortfalls in capital up front and recapitalized banks and recognized losses, I think have been in better shape than those who haven't and are having to do it late. I think it is just a fact after you get an enormous banking crash that there's going to be additional regulation to prevent what happened happening again. And frankly, of course, capital was completely inadequate. I think it's important that the transition periods are long. And one of the challenges for all policymakers is, when we put in what we think are long transition periods, sometimes the market gets there before us. But whether it's on Basel or whether it's on, for example, the reforms that we're introducing in the United Kingdom on ring-fencing retail banking, we have given decent transition periods. But I think fundamentally you can't duck the fact that the system was profoundly unstable, as we've all seen to our cost, and you have to address that. But you have to try and do it in a way that is at least pro-cyclical as possible.
I would first of all observe that the financial sector and the banking sector in particular, but not only, is an accelerator and a conductor and a catalyst for crisis. When we do our sort of spillover analysis at the IMF, we see that that particular sector is just special. It's like nothing else. And the reason the financial crisis originating out of the United States has spread so fast is that it was clearly channeled, amplified, and accelerated by the fact that it was essentially a financial crisis. So, as a result, that particular sector warrants particular safety, measures of ring fencing, measures of resolution, specific tools used to actually I'm trying to be very selective with the words, but trying to avoid any contagion or any ramification out of, whether it's bankruptcy, whether it's liquidation occurring anywhere. So as a result, I think that number one, capital requirements and liquidity requirements as provided under Basel III or in any other ramification, derivation of Basel III, as it's happening around the world at the moment, is perfectly legitimate and justified. And if that were not to happen, then we still have that potential accelerator and catalyst of crisis. It started there, it has to be fixed there. And I think that, to assume that we can defer, we can, allow time and sort of complacency about the way in which this sector is strengthened, ring-fenced, organized, better addressed from a resolution point of view, to have that illusion, because we would think that that money is actually needed elsewhere in the economy, would be really an illusion, because we would fall back into the hazards that we've had a few years back.
Let me tell you a story. We were in Jackson Hole. This is a yearly meeting of the central bankers of the world, and we're all obsessed with the question of the firewall. How big and how thick and how tall and how wide and how whatever. I was saying we should create the mother of all firewalls, and everybody was saying. And in comes Christine Lagarde, and she says, it's about the bank's capital, It's the bank's capital. And everybody said, what are you talking about? You know, learned op-eds and everything else. Said, what is it? This is not the right time to buy commodities. Well, it happens to be, that was a year ago, okay? Now that is the number one issue. And we haven't even gotten to that because we offered 100 billion to the Spanish, but not a penny has been transferred because, of course, before that we have to create the European regulator, and before that we have to, there needs to be a little bit more pain before we actually, you know, where is the judgment of the threshold of pain that has to happen before we cross that in order to actually transfer some of the, you know, this. But the fact is, there was identified an issue of the system, a vulnerability of the system, with, you know, enough lead time, where in that time could be some retooling before it became an enormous added wooden leg of the system today. You know, and we're trailing the thing and we can't get off. And of course, banks do have to do, besides not going bankrupt, which is good, they also have to lend. And they're not actually back in that business, among other things, because they haven't capitalized themselves. Now, every now and then you have to remember about the liquidity. Yes, you know, very welcome liquidity. By the way, here, the liquidity injection, very important because, again, they were focusing on the capital, and then the liquidity was very much needed. In Europe, that had been done by the ECB before. But all I'm saying is these delays in the governance and the identification, and what happens is that the number 3, 4, maybe number 5 priority jumped the queue and became now the more burning issue because we're far away from you know, dealing with the sovereign debt issue too fast. But of course, we now have to deal with the bank capitalization because, among other things, it has become, in the case of Spain, for example, it became the one great area of vulnerability that focused the markets on the problems of Spain.
Christine, Angel, thank you again for coming to London. Ladies and gentlemen, I hope you enjoy the Olympic Games, those of you who are hanging around. We're going to hand over, I think, to Stephen to wind up the conference.
Thank you. Thank you very much indeed, George Osborne there, for setting out the investment climate in the UK and how it would contribute to growth, and for Christine Lagarde and Angel Gurría for sharing their insights on the hard choices in the current economic climate. We've heard a range of opinions today, but I think I can safely say that you, Angel Gurría, get the first prize for delivering your arguments with the greatest passion, vigour and animation. And we go back a long way, so I can say that